I think it's very much what John Williams said about inflation. That's something that we paid very close attention to. We're also very mindful that the Fed can hike because normalizing to them means returning real rates to positive, and inflation is much higher than where the Fed funds rate is right now. I think the key thing is whether it's going to be in April or in June. I think we believe that April will probably be a better time to hike because June we have the Brexit referendum as well as the Japan upper house election. So that could inject some volatility during that period.
So we've been hearing about a June rate hike, but you're saying in terms of timing, April makes more sense.
Yes, I mean, look at last year, April, we had the renminbi devaluation that created some turmoil in the stock markets, especially brought oil prices lower, the Fed paused so that it could hike later, to calm things down. I think this time around we had the same kind of merry-go-round again. In January, same thing about renminbi. Then the Fed paused, and right after the FOMC, the dollar stopped falling and start thinking about the hike again. So I think April would probably be a better time.
And you heard John Williams say there that inflation is a key marker here, not necessarily the jobs data. Is that how you see it too?
We've been following the Fed normalization for the past couple of years. I think if you look at their literature, they're quite clear that they're mindful that the global environment is very challenging. US is strong while the rest of the world is weak. So they have been quite clear about being gradual. To them, I think our original plan is to hike one hike per quarter.
And what's the expectation now? You said 3 rate hikes?
We are still looking at the base scenario for 1 hike per quarter. So we still have penciled in about 3 hikes for the rest of this year.
3 hikes, even considering all the volatility, everything that we've seen, because you're saying the data coming out of the U.S. has been strong. It remains strong.
Yes. I think the challenges with the other countries lies with the other countries. What you are seeing after the G20 is de-emphasizing on monetary policy to support growth. Increasingly, you're finding more countries like Japan. In May, they're talking about, Prime Minister Abe is talking about fiscal stimulus. So China has moved to some kind of stimulus as well. So increasingly, you're seeing this shift away from monetary policy. And especially after the Bank of Japan's negative rates, has led to,
some backlash there. Let's talk about the Japanese yen. I mean, we're seeing it at 113 today. Up from, or I guess it's weaker than, the 110 we saw last week. But where do you expect it to settle? And it's certainly not at the 120 levels we saw last year.
Our forecast generally is looking for a range between 110 to 115. We think this move up, we might be capped at 116, which was previously what we call the Hamada support level. It broke right through right after the NIP. So I think right now the focus is really on the Fed, but at the same time also that Japan may be moving away, from monetary policy towards fiscal policy. So that hopefully, I think, would bring some of the voters back, to supporting Abenomics at the elections.
So you talk about how the yen has moved since the BOJ introduced the negative interest rates back in January. Now that it's back, let's say it settles at 116, does that take the pressure off of the BOJ to act? Because you're saying it's moving away from monetary policy, right? I mean, how much of the strength or weakening that we've seen in the yen, how much of that takes pressure off of the BOJ? I
think you cannot say that it's totally off the table. I think the key complaint was that over the last few months is that the focus has been solely on monetary policy, that is not augmented by other policies as well. I think this is where the debate is shifting, that you should have a nice mix. For example, right after the Lehman crisis, QE alone wouldn't have helped. It was really the fiscal stimulus, together with the QE that helped to put a bottom to the floor during the crisis.